Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
A specialty retailer and a company that, for right now anyway, is tops in streaming original video content. That's what we're going to hear about in this edition of Top Stock Picks with our strategists, Nina Mishra and Dan LeBeau. Nina, we're going to start with you. You have that specialty retailer, Best Buy, and as we were talking just a while ago, it was not long ago that everybody thought that this stock was on the ropes for good.
Yeah, right. It's not been easy for most brick and mortar retailers to survive in the age of online shopping, particularly on Amazon.com. And I think because it's Amazon Prime Day, we have this shopping mega event going on, the 48 hours, where Amazon is offering a lot of deals, and other retailers like Best Buy, they are also offering their own deals, and their sales will also get a bump from this Prime Day event. So Best Buy, as we discussed, has managed to survive in this era. So over the last few years, they have really improved their merchandise, their in-store shopping experience, and particularly their online channel. And about 70% of the US population lives within 15 minutes of a Best Buy store. So that means they can offer things online, people can buy online, and in most cases they match Amazon's prices, so people can buy online, then pick up from a Best Buy store near their house, and in most cases that item is shipped within 2 days, matching Amazon Prime's speed without having to pay for Amazon Prime's fees.
Right.
Of course, Best Buy has also benefited from the demise of its competitors like Circuit City and Radio Shack.
Yes.
And they have been changing their merchandise according to the latest trends. And recently they announced that they would be offering connected fitness brands, which is going to really benefit them in this era of rising, fitness, fad for fitness.
Yeah.
So that is also going to benefit Best Buy. They reported excellent results again, beating the Zacks consensus estimate. And if you go to the detailed estimates page, you will see that analysts have raised their estimates for Best Buy after their results, and their online sales rose 15% during this quarter. And if you look at the price, consensus, and EPS surprise chart, you will see that they have missed only once in the last 5 years. Now, the stock is not cheap. It's about up about 50% this year. But if you look at the valuation, it is still trading at a forward PE multiple of 13. So among the retailers and its competitors, it still looks attractively priced. Another reason why I like Best Buy is that they have been returning a lot of cash to their shareholders in the form of dividends and share buybacks. Earlier this year, they announced an 11% hike in their dividend, and this was the 6th consecutive year of dividend increase. And additionally, they have also been returning through buybacks. The current dividend yield is 2.65%, which is great.
Yeah, for a retailer, yeah.
Yes, and it's a Zacks ranked number 2 stock with A for value and C for VGM. So I think it's definitely worth a look.
And the stock's been outperforming its industry.
Yes, it has.
You don't want to forget about that. All right, Daniel, you're going to be talking about Netflix. A lot of interesting things going on with this company as they get set to report their earnings on July 17th.
So Netflix has been on a tear in the last 5 years. They've been outperforming the rest of the FANG stocks, the Facebooks, the Amazons, and the Googles. And, the question is can this growth continue? So most of their revenue is based off of, actually 100% of the revenue is based off of subscriptions. And subscription-based revenue is going to be the gold standard and becoming the gold standard in the tech industry today. And it's showing quarter-over-quarter, year-over-year growth that seems to be unending in a lot of ways. And this is allowing investors to feel comfortable with higher multiples with what we're seeing at Netflix. They're currently trading at a 79 PE, and that's astronomical compared to any of the other competitors. But so they're reporting earnings tomorrow, like you said, and they're actually expecting a slowdown in their additional subscriptions. And this is due to the fact that I feel like they're plateauing, especially in the US. Everybody that has a Netflix account, everybody that wants a Netflix account already has one at this point in time. So I think that the future growth of this company is going to be internationally.
Right.
So one of the big concerns, I think, is the saturation in the space. We have Apple coming out with Apple TV Plus at the end of this year, and we have Disney coming out with Disney Plus, which I think is going to be their biggest competitor moving forward. And that's supposed to be released November 12th of this year. And they announced this April 11th earlier this year, and the day they announced it, Disney was up 12%, Netflix dropped 4.5%. And I think that the competition is going to be really severe internationally, considering that their price point for Disney Plus is going to be lower, and the fact that internationally Disney, I think, is a little bit more well-known, considering they have international movie releases as well as theme parks around the world. And when international consumers are comparing the two options, they're going to potentially choose the one that costs a little bit less.
Well, they certainly have a huge library of their own content to start with.
Yeah, they do. And the most recent acquisition of 21st Century Fox, I think, is really adding to that. And I heard a rumor that they're going to be combining FX Plus, ESPN Plus, as well as Hulu, which they just got a majority stake in during this most recent acquisition. So it's going to be a very interesting competitive landscape moving forward.
Yeah, to say the least.
Right, and one of the concerns with Netflix as of now is that two of their most popular shows, The Office and Friends, that are being rerun on Netflix is going to lose them in the next couple of years. So whether they can get more popular shows to run on their network, or they can produce more, original content like Stranger Things.
And I think that's what it's going to come down to, is the original content.
Yes.
How much quality original content they can pull.
Yes.
And that's one thing that I think Disney might have an upper hand on, considering that they have had so much money just surged into their movies and their TV shows.
Yeah.
So,
Netflix also loses another well-rated program in one more season, I believe, Supernatural. Is that true?
I'm not familiar, but
They have one more season
about
of
The Office
production.
and Friends.
Yeah.
But Netflix is expanding very fast in some of the developing countries. In India, I have seen they are producing a lot of original content now, and they are becoming very popular. So, as he mentioned, a lot of the growth, the future growth, will come from developing countries and other international markets. So it remains to be seen whether they can grow their revenue.
Sure.
And once it all plateaus, it's going to end up being how fast can you raise the price?
Yes.
And how much profit can you pull off each individual subscriber?
Yes.
Yeah, and
That's
probably
what
all
it
these
comes down to.
competitors will see plateau at a different rate
Yeah.
because they're starting at a different rate as far as coming online with their platforms.
Yes.
Well, we'll have to keep an eye on it. Dan, I'm sure you'll keep an eye on it for us. Do either of you own either of these stocks?
I do own Netflix in my personal portfolio.
Okay.
I do not own either of these stocks.
All right. Well, thanks for that. Don't forget, always more content on these two stocks and many others on our website at Zacks.com. Get on over to the homepage. That's where it all begins as far as your adventure is concerned. With Nina and Dan, I'm Terry Ruffalo.